Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Finally, we are on Friday. And what a week it has been. Started with an all-time high on Monday and, is looking a little despairing now as we close this week out. It's an important one, especially after market hours. Two triggers, which I think will dominate how we trade on Monday morning. We'll discuss all of that. We're coming to you from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Reema. Guys, good morning.
Hi, good morning. It's been a near 500-point fall on the Nifty just in the last four trading sessions. The big fall, of course, came yesterday before consecutive session of losses. And not just the global triggers that we're watching today, the jobs report and the Supreme Court verdict on tariffs. Next week is such a big week in terms of earnings, whether it's tech, it's banking names, Reliance Industries. It's, will be mark time today is the question ahead of that.
Well, that's right. What a start to 2026, right? I mean, so many cues for the equity markets as well. And on a personal front, when I wrap up this week, I'll be just, reflecting on a couple of losses in the start of 2026. Mr. Anil Agarwal's son, as well as Sid Bhaiya, just tells you how fragile life is, right? And uncertain. So I think today it's not going to be about the party or about the end of the week. I think I'll reflect a little bit because... that's something that really has put me a little bit off at the start of 2026. But we've got markets to deal with, so let's get straight to it.
Absolutely. And I think, the theme seems to be uncertainty and a very uncertain environment everywhere out there. Let's just take a quick look at what you need to know as we begin this fresh trading session. What do you have, right? I mean, U.S. equities are mixed. Actually, it's not so much price action once again from last night. The S&P flattish, Nasdaq is down about 0.4%. And there are two big cues. I'll sort of, come back to what happened last night once again, but I just want to start and address what is most important right up front, right? So you've got Trump tariff ruling, which is number one, and you've got the U.S. jobs data, which is number two. So the Supreme Court ruling on Trump tariffs will come our time later tonight at about 8 o'clock. We should have it, most likely. And the U.S. jobs data, of course, comes around U.S. market opening time. And there the consensus is for about 70,000 jobs. I'll come to that. Now, consensus also is, if you look at prediction markets, they're saying that there is a chance in the high 70s that the U.S. Supreme Court will partly strike some of these tariffs down. So all tariffs, no tariffs, some tariffs, but, perhaps there will be some action and most likely perhaps a partial kind of rollback. Now, these are the emergency powers that President Trump used to impose all these tariffs. So far, all these tariffs, right? These are the IEEPA tariffs. And that is what we're talking about here. Now, I said this yesterday as well. If it were to come to that, the Supreme Court partially strikes down these tariffs, expect President Trump to come out strongly and, of course, say, well, the decision from the courts is wrong and that he will find a way to put these tariffs back on. Tariffs have been central to the Trump administration's policy from day one. And don't expect them to back off. So if there is a decision, don't think, well, tariffs are over. They're not over. They will find other ways. There are other sections to do it. The IEEPA tariffs are the section under which all these tariffs were imposed over the last year were the most convenient, fastest, quickest way to do it. There are other sections. They are more cumbersome, may take more time, but they can do it. So I think that is what we are looking at. Now, the question for us in India, especially us in India, first of all, just in an absolute headline tariff level, we are one of the worst hit. So in that sense, right, can the Supreme Court striking down at least even part of the tariffs be at least a short-term, can lead to a short-term risk rally when we come back on Monday? And I think the answer perhaps is in the yes, if it does come to that. Because, for at least a few days, even if we hear from President Trump, there will be confusion. People will start to look at these sections. How long will it take? It will certainly take longer than just a stroke of a pen like he's used the IEEPA ones. So does it provide a window? Some breathing space is the question. And I think perhaps as I said, the answer is yes. Now, the other one, which has not been talked about at all, right, is the fact that U.S. Ambassador Sergio Gore will be in India U.S. ambassador to India, will be taking charge, will be here starting Monday, this coming week. He was here, remember, on that flash visit, met many leaders, Prime Minister Modi as well. Now he's back here permanently. The reason that is important is that, several people like Ashok Malik, etc., have said that Sergio Gore has got direct access to President Trump. He's in the inner circle. He's he's not a typical career diplomat. Him being here, he can cut through the bureaucracy and get President Trump on the line. So at the margin, it is a positive. Will it lead to something? I think we'll just have to wait for it. But at the margin, that is one more point which I think the markets will be paying attention to. Okay, so that's the US bit, right? Now, just from going back to last night's action, oil prices were up 5%. So there's a big pop, $63 a barrel. No specific reason. Down and up, but from 60 and 63, that's been the range for the last 1 week or so. Two largest mining companies are saying, well, they may merge. Glencore and Rio perhaps are in talks to form the biggest miner in the world. In the same vein, in terms of commodities, silver was down sharply, 5% or so, but it kind of sort of recovered and ended down about 1%. Defense stocks, I think the one enduring theme from everything which is happening, all these uncertainties, the fact that everywhere defense spending is going to go up. Remember, defense stocks all sold off the prior session. They were up last night. Lockheed was up 4%. Trump essentially is calling for a 50% increase in military budget as far as the US is concerned. Trump also gave an interview to the New York Times, and he said, well, he's made up his mind on the Fed chair pick. Besant basically was also on the record saying that current interest rates are far above neutral. And when he asked where should rates be, he said, 3%. He said consensus is 2.5 to 3.25%. So that's the other one. And this is again going to be a big factor. How much pressure, how much influence can the executive branch in the US put on the Federal Reserve to lower interest rates? The Fed pick, etc. It's something we will have to talk about. Now, just to tie in the levels here, yesterday, of course, was a very, very bad session. From the highs on Monday, all-time highs on Monday, the Nifty is down about 500 points. Bank Nifty is done much better. It's down about 1.25% or so. The small cap index, the mid cap indices, small cap closed exactly at the 20-day. The mid cap index closed below the 20-day. So these moving averages are all under are breaking, straining, have broken. And I'll just leave you with those levels once again. The key 20-day moving averages, as I've done for the last many days, 26,044 is that level. We are under it. And of course, the Nifty Bank is 59,409 or so. GIFT Nifty up on your screen gives you a quick sense, about 12 points. So very undecided going into those important events later today. Nigel has walked across to the wall with the F&O positioning. Nigel, over to you.
Well, yesterday the session belonged to the bears, right? No two ways about that. The Nifty ended way below the 20 DMA and the broader markets as well sold out. So yesterday, in the sense, was a bit of a backbreaker for the bulls because still yesterday, actually, they would still have their hopes up. But let me get to a couple of data points that actually they could be banking on. The problem now is that the FI net sell number, well, that's perked up. Remember, their participation was low. As their participation is picking up, the sell number as well is picking up. So at around 3,400 crores odd, that's getting to be a bit of a worry. In trade yesterday, besides the FI selling, that appeared that there were shorts that were getting accumulated into the Nifty, on the futures segment. While on the Nifty Bank, actually, the open interest was down, telling you there was some unwinding of long positions out there. Yes, the structure is weak on the Nifty, but there are a few technical factors that the bulls will be banking on. First up, in terms of the short positioning yesterday, it went up big time because the shorts that the FIs added were close to around 31,000 contracts. I'll tell you what, this is the highest FI net short build-up in the last 7 months in absolute terms. More than 30,000 contracts in a single trading session. And the short positioning now moves to around 91%. So you have shorts in the system, but we need that good news to come for this, in fact, for the shorts to get covered out. So that's point number one. FIs aggressively net short. The clients, they're doing the reverse of what the FIs are doing. So in yesterday's trading session, they added some long positions. More than 12,000 contracts is what they added. And if you look at it in absolute terms, the FIs are aggressively net short, as that is telling you, while the clients, the long positioning is at the highest we have seen in the last 3 months or so. Normally, this combination actually is good, and that's when we see a bit of a bounce. On the options data side, which is the second data point I'm making, the first one was the FI is a net short. The second data point is that the PCR has come to the lower end of the range. Remember, the start of this week, it went to around 1.5. Now it's come to around 0.66. At around 0.6, 0.63, we have seen a bit of a bounce. That's the other data point. Then if you look at the Nifty and the gold ratio, that's come to sub 2 times. Remember, in the past, whenever we have seen this, more often than not, you've seen a bit of a bounce from these levels. So either this is the new normal, closer to around 2, but otherwise at around 2 times, you do see a bit of a bounce. While at around 3 plus, that's when the returns get a little bit subdued. And at around 4 times, it doesn't turn profitable from a bullish perspective. Moving to the options data, called writers, well, they are having a gala time. 26,100, 26,000 call, 26,050 call. Aggressive writing is what we have seen. So they believe that these upper levels are going to get protected. To put in a few levels, well, the support zone is around 25,500 to around 25,700. I say this because even in December, we visited this zone, and from there, we did see a bit of a bounce. While the 20 DMA, that becomes the crucial resistance mark. The two big constituents of the markets will have to come and, bat for the bulls. Because, yes, the Nifty has broken that 20 DMA, but the Nifty Bank, that's still a little bit away from the 20 DMA. You don't want that level to break. And Reliance Industries, the big boy, has corrected from the top. It's getting closer to around the 200 DMA, so you don't want this level as well to break. Both the Nifty Bank as well as Reliance Industries will have to play well from here on to defend the Nifty. And as I said, select factors are suggesting we're getting into a bit of an overstretched zone on the downside.
Thank you very much for that. Reliance Industries numbers are next Friday, post-market hours. And then on Saturday, that's 17th, you've got HDFC Bank and ICICI Bank reporting numbers. And through the course of next week, lots of IT names, whether it's TCS, HCL Tech, Infosys, LTTS, many mid-caps will be reporting numbers between Monday and Friday. But post-market hours next week, you'll have Reliance and the two large private sector banks. But let's get you the equity calls then. It's Rupal Agarwal of Bernstein who believes India is presenting a balanced risk-reward setup, warranting a neutral stance. So she says, while stretched valuation, potential risk, a potential rise in risk premium, challenging stock picking environment, lack of macro recovery, and even the valuation earnings support does create some near-term challenges. She sees positive tailwinds from strong earnings recovery cycle heading towards upgrades, reasonable relative valuations, low long-term earnings growth expectation and potential return of foreign capital, resilient domestic flows and likelihood of a US-India trade deal offsetting the negativity. But in a nutshell, I think the call is from Rupal Agarwal of Bernstein that the setup appears to be neutral.